Asian markets start the week strong as Powell signals potential US rate cuts next month. Meanwhile, we're counting the cost of climate change from fires in Europe to floods in Asia. The economic toll is now in the hundreds of billions. And we take a look at the ambitious new plan to build Africa's AI future from within, aiming to keep billions of dollars within the continent. Hello, I'm Taiba Aiden with the latest business and finance news here on TRT World. Asian markets kicked off the week with a rally after US Central Bank Chief Jerome Powell signaled that the central bank could begin easing monetary policy next month. Hong Kong's Hang Seng Index surged more than 2% to a four-year high, led by property stocks, while mainland China's CSI 300 extended its gains for the fourth consecutive session, climbing 1.39% and reaching a 37-month high earlier in the day. The tech sector was among the biggest gainers, with the Hang Seng Tech Index rising 3.1% with strong moves in semiconductors and electronics. Let's get more on this now with Jameel Ahmad in Dubai. He's Chief Analyst at GTC. Good to have you with us, Jameel. Now, markets have welcomed Fed Chair Powell's signal of a potential rate cut next month. Was this widely expected?
I would say it was hoped, but not necessarily widely expected, because Jerome Powell, the Federal Reserve Chair, has always had somewhat of a poker face on, where this year, 2025 so far, he hasn't really given that much away when it comes to his comments. But what was interesting at the end of last week is that he did seem to signal that the time is approaching for the Federal Reserve to resume cutting US interest rates, something they haven't done in 2025, but they did multiple times over the course of 2024. I think what piqued traders' interest is that you seem to see a signal from Jerome Powell that they're looking more closely at employment data. Of course, we had a very weak monthly employment report at the beginning of this month, and we also had that concerning revision where you had up to 200,000 jobs revised lower from the previous 2 months. And also, he seemed to suggest that although tariffs are being very closely watched, it might be that it leads to one or two increases in the inflation rate, but then we should see that subside. So I think that's what got traders excited that over the second half of this year, maybe into 2025 as well, we're going to start to see lower interest rates in the United States once again.
Right, and now we're seeing big gains in Asian tech stocks, but it doesn't seem to be the exact same story over on Wall Street. Is that the case?
We have to wait to see. We also should take into account that historically lower interest rate policy has been somewhat of a magnet for investors to start looking towards emerging markets. So we might just be starting to see some more of a shift in that direction over the early hours of trade on Monday. Let's see how Wall Street plays out over the remainder of the week. We still have some key economic data to see. PCE data, which is the inflation preferred metric from the US Central Bank. So I still think we've got some, I would say, some fires out there that we just need to watch to see how investors start to play out as we start to head into September.
And we have some big earnings due out this week, especially Nvidia, which will give us an insight into the AI bubble. What are markets pricing in at the moment?
Essentially, expectations are high. And when expectations are high, and we've already got very stretched technology stocks out there in the US markets anyway, I would watch out to see if there's any kind of under-delivery with expectations or with the earnings, and whether we might have a little bit of a risk of a sell-off just because of profit taking. But overall, expectations are high, and into the earnings, Nvidia has been somewhat of a tech darling over the past year or so. Let's see if it can continue to run on that height.
Jameel Ahmad, Chief Analyst at GTC, thank you very much as always.